Good evening, friends. Depending upon the time zone, whenever you're going to watch, good morning, good afternoon, and good evening. I am recording this video at around 11:10 on February 26th of 2023. Very happy to share that, last 2 days I attended a conference where I had the chance to talk to, attend to or listen to some of the CEOs and CIOs, chief investment officers of various mutual funds conducted in Taj Coromandel in Chennai. It was very inspiring and got some messages. So I just thought I will share few things with you. Definitely, Adani, in spite of having a great budget, Adani is having a kind of an impact on the stock market. It's not only Adani. I would say, even Russia came and said, they may use nuclear weapons, and that also may use. They use the word Russia may use. Even those two words, created some panic. And we really don't know, what is going to be the impact of this earnings per share, especially on bank stocks or, even LIC. LIC has a huge, kind of exposure, let's say 30,000 crores. So 30,000 crores is not a big money for LIC, but still it will have an impact on the financials. We don't know how the financials is going to come. And elections are around the corner, and state elections are going to come for next few months. And even the oil price, the crude price, we don't know how the whole thing is going to be there over the period of some time. And if you look at the asset classes are very, very attractive in the sense, if you talk about gold and silver. The gold and silver has corrected in the last couple of weeks, I would say. I mean, 2 to 3 weeks, it has really corrected, and it's looking really good. And if you look at kind of debt instrument, the debt yield is seven. Even SBI is saying they are giving 7% on a 400-day deposit. So what I thought is I'll put all these things together and then give it in three different buckets for you, so that you can plan the next financial year. I'm talking about financial year 23 to 24 in a very effective manner. Okay, so those are the three things which I'm going to talk about. The first thing I'm going to talk about is the price to yield, price to yield graph. So when the prices are really high, the yield is very, very less, that you can see it. Similarly, when the price comes down, the yield goes up. The yield goes up. At this point in time, the dividend yield, I would say, is around 1.3% or 1.4%. Whereas, if you invest in bond market, even long-term gilt funds, you're able to get a little bit more than 7%, 7.2%. So there is a gap is there. Equity is not very attractive. Does it mean that should I sell all the equities and then move into debt? The answer is yes and no. I would say, if you're going to be staying for a very long term, let's say, you're going to be there for, let's say, in the market for 20, 30 years, I think this should not even matter. Whatever is happening now doesn't even matter. Even those people who are in the age group of 60, you should not worry about diluting the stocks, because we are talking about a long term, this one. So it's not a matter. But if there are any goals are there, which is going to come up in next year, the following year, and all that stuff, then we need to have a discussion, because three things could happen. Either the current PE ratio of Nifty is around, let's say, around 20, 20 point something. I'm talking about the actual PE ratio, not the forward PE. I'm talking about the trailing PE is what I would say. It's around 20 point something. So that's really attractive. But based on the previous past experience, if anybody who's entering now at this particular level, over a period of 3 years, they can even get a simple yield of 50% higher. 50. So 50 over 3 years is about 17%. This is, I'm talking about the track record. But when the P goes to, let's say, 21 or 22, what happens is you will get only 7.5%. But when the P crosses 23 and above, what will happen is that is even there is a possibility of getting negative returns. We don't know what is going to be there. I cannot predict stock market. Most of the people cannot predict what is exactly going to happen stock market. But having said that, if you're going to have long-term goals, you can stick to equity. Equity. That is point number one. But what Shankar Narayan of ICICI was telling is that is you should also look at what the market opportunities are at this point in time. So he was talking about multi-asset fund, asset allocator fund. He was talking about balanced advantage fund and all that stuff, which takes care of all this kind of things. Because at a fund level, if they sell it and if they buy it, there is no tax implication. So this is what he was talking about. But we have to wait and see, whether we are going to get 50% or whether we're going to get 0% or whether we're going to get minus 25% if it's only short term. But there will be times where, the market will give you much better results. This is on the first graph. The second graph is about budget. So what the budget has done is that is starting April 1st, 2024, you can 2023, April 1st, 2023. What you could do is you can invest additional 15 lakhs in senior citizen savings scheme, which can give you 7.6%, 7.9%, or whatever, even 8%. Let's assume that it's going to give you 8%. Now, there's another table which is there in my back of my screen where you will see it's there in the purple color, basically. So if you talk about investing in 3 years, let's say like not 7.5, like a cumulative, you may get 1,25,971. But unfortunately, most of you are watching this, like, I'm just putting you this kind of videos in both in YouTube and LinkedIn. I'm trying to populate it. Most of the people, most of my clients, or most of the people who are watching this are always on the higher tax bracket because of three reasons, even if they have retired. First reason is they hold like something called an annuity policy, and like from TCS or like wherever they have retired, they will get something called superannuation or pension. So when you get a superannuation or a pension, that itself takes care of, let's say, 6 lakhs or 7 lakhs. Your basic exemption gets exhausted. The good thing is, even for the pension which you are getting from superannuation, you can claim 50,000 rupees standard deduction from going forward. That's a one good news. So first news is like salary, even pension as a salary, you're getting in a very big amount. This is point number one. The second one is some of my clients are also holding good amount of direct equity stocks. So when you're holding direct equity stocks like TCS, like where the dividend yields are very, very high, and they also give special dividend, interim dividend, and all that stuff. Sometimes people get even couple of lakhs every quarter, or like huge money in a year. So that means when you add these two components itself, it crosses something like 12 to 13 lakhs. Now add to this, like let's say your senior savings scheme, your Pradhan Mantri Vyaya Vandana Yojana, you're always on the 30% tax bracket. So before I go to the purple image, I can go to the bottommost image. Even if you're going to be in 15 lakhs, let's assume that even after retiring, you're going to make 15 lakhs, you will be in the 30% bracket. So which means that can I go and invest this money, that 15 lakhs into in your name? My suggestion is like, please talk to your tax advisor, and please see whether your spouse is more than 60 years, and please see whether you can give a gift to your spouse, like in a legal manner, saying that like for all the things that you have done, can I do it legally, ethically, like can I give the donation to your spouse who's more than 60, and then ask her to invest, and then ensure that like you don't claim anything, and then you declare it as an income. Maybe then that is okay. In case if your spouse is not 60 and then you're like this, then my suggestion is if you invest in a debt mutual fund, and if you do it for the same 3 years, there is something called indexation benefit. So in the background, like you'll see in the purple color image, the third one is called indexed cost of purchase. So if you're going to put it in senior citizen savings scheme, or like even SBI 400-day deposit at 7%, that indexation will not be available. But if you're going to be on like let's say Tata Gilt Fund, or if you're going to be on IDFC Gilt Fund, or if you're going to be on even ICICI, like kind of fund which is taking duration call for 3 years, if you're going to be there, the inflation impact will be considered, and your tax payable will be reduced at least by 7,000 rupees or 7%. It will be reduced closer to 7,000 rupees. So which means your effective return will be 7.5% or 7.6%. So my suggestion is don't park all the money into this. Do some math, and then do a tax planning for the next few years, and then see that which bracket you belong to. And like there are times where like people come back and ask, like Sendil, last 1.5 years, like the equity funds have not done extremely well. The answer is yes, the equity funds have not done extremely well. It was a volatile year last year. But if you look at equity funds, like or even equity Nifty fund also, what happens is there will be 1 or 2 years where the returns will be kind of muted. But like those people who stay put, let's assume that the election is very positive, and let's assume that Modi comes back in power, and like next two budgets are going to be like similar to this, and there's going to be a lot of capital capex is going to be formed. Let's assume that the GST collection, which is really, really good, the GST collection will be really high, and let's assume the interest rates will also come down. Let's assume that there is no war between the war between Russia and Ukraine is subdued over a point in time. If all these things happen, I'm sure even the market can go up even 50% or 60%. If all these things happen, definitely it will happen. Don't quit the market quickly. Take a very, very balanced view. Happy investing. Don't put all the money in super senior citizen savings scheme. Do the complete math. We are always there to help you out. Hope this short video gave you some kind of good insights on where to invest, whether to invest in silver or gold, or whether to invest in debt mutual fund, or to put the money in SBI fixed deposits, or whatever it is. I hope we provided some clarity. You can always write to us. We are happy to help you. Thank you, and happy investing. Thank you.